Okay, so good morning, everyone. Welcome to the Macro Snapshot. We are Wednesday, December the 3rd, 2025, recording this in the morning. Let's just have a look at the calendar because there actually is a little bit of data coming up this morning, or surveys and whatnot. So, first of all, I just keep an eye. I want to talk about later. Just notice the inflation rate here in Switzerland came in a little less than expected. You see, came in at zero on the year-over-year number, and whereas the consensus was for a slightly higher number. And the inflation rate came in a little bit lower month over month as well. So just keep an eye on that Swiss inflation rate. But in terms of the US, what we do have today is the ADP employment change. So that's the weekly number. It's expected to come in, at about 5,000, maybe 15, depending on the forecast or the consensus, but relatively weak. And it looks as though the US labor market, the markets in general, the market has come around to the consensus that, with increasing immigration controls by the Trump administration, we're settling into a sort of a low supply of labor, but with a low demand of labor. So the thing is that, employers are not really sort of, employing a lot more people, but they're not firing a huge amount of people just because the labor supply is relatively low because of immigration controls. That's one way of looking at it. I mean, we are hearing though occasionally, 5,000 jobs lost here, 10,000 jobs lost here, also from some of the tech companies. So we'll see as these numbers become more and more updated, and let's keep an eye on that. Although, as I say, the market is relatively comfortable now with a sort of a lower sort of growth in terms of the numbers. We're no longer looking for plus 100,000, plus 150,000 jobs to be created, but let's just keep an eye on the ADP number. And one thing as well, just in terms of the market reaction to that, I think what the market in general is looking for is an economy which is okay. So we don't want to have like a crazily overheating economy producing 200 or 300,000 jobs, but certainly the market would not take kindly to let's say a negative number or a substantial negative number of minus 20, minus 30, minus 40,000, because what the market wants is for the Fed to continue its gentle cutting cycle without the real economy actually falling off a cliff, which would be a tipping point. So the sweet spot is something which is, maybe sort of tepid in the sense that, slightly weak, but not calamitous, and on the other hand, not overheating. Other interesting stuff to look out for is possibly also at the same time we get the import prices. So let's keep an eye on these import prices for any sort of sense of whether inflation is being potentially added to by the tariffs and whatnot. So let's keep an eye on the import prices, and then possibly even more important. At 10 o'clock, we have the ISM services. Keep in mind that the manufacturing we had a couple of days ago was a little bit on the weak side. So the services, which makes up, 65, 70% of the US economy, let's keep an eye on that. The headline is the consensus is about 52. So still in expansionary territory above 50. But, the market will want to see that, as I say, is just hovering at a sort of a point of sort of stability. Other interesting things, apart from that, are subcomponents. The employment expected to be under 50, like last time, a little bit weak, around about 48. New orders was actually expected to, the forecast is for 56, which is, similar to last time, quite strong. So, and the prices. So we want to see that combination of the prices paid, is inflation still being sticky, the employment data, and also new orders looking into the future. So interesting mixture there to look out for. Also, of course, we have the oil at 10:30. We have the oil inventory numbers. Okay, so just looking at a couple of other things, let's look at some charts here. Whoops, actually, I just had it here. Sorry, just let me bring that up. Okay, so if we look at some charts, let's just start with the bond market. It's interesting because there's a talk from that a few interviews which had been scheduled with Vice President Vance today, potential candidates for the new chair of the FOMC have been cancelled. Sorry, there's an awkward way of putting everything, but essentially some job candidate interviews have been cancelled today, it seems. And Trump is saying, he seems to have made up his mind. It looks as though Kevin Hassett maybe is going to be the new Fed chair. And it's interesting to see what's going on there. We're seeing, overall, not exclusively down to that news, of course, but we're seeing the US dollar in general weakening. This is the dollar index. Also seeing that bonds, if we just have a look at the bond market, we see that the front end of the curve, we see the last couple of days, we see this on the daily charts here, starting to push above these moving averages. So ZT, the 2-year bond up. We see the 10-year also having a bit of an up day. of the last few hours, and the ZB as well. So in general, what we're starting to see is a bit of a sort of a weaker US dollar. We're seeing the bond market sort of bull steepen a little bit. And the idea here is that, if Kevin Hassett were to come in, the front end, there would be some rate cuts, and potentially they would have some kind of mechanism to keep long-term yields a little bit stabilized as well. And together with that, it's a bit of a risk asset kind of rally as well. If we look over at the VIX, we can see that the VIX is down to about 16, so indicating about a 1% move per day, which on the S&P would be, about, what's that, about 68, 70 points. So that's, a relatively limited sort of range here. That should be a tailwind for the equities. We also see, just looking back at the VIX, the volatility curve, you can see it is under zero here between VIX and the front futures contract. So that is indicating a VIX curve which is in contango, which is indicating a lack of particular stress. So all of that to say that's quite a positive for the equities, although no huge moves. Still waiting for a bit of data, maybe just trying to see what's going on. But overall, it's not going down. We are trading around the highs. We can see a slightly stronger reaction in the Nasdaq. That looks as though it's just grinding. And really at this point, if you look, let's say we break down the Nasdaq just as an example on the 4-hour chart, just get a bit more sort of detail here. You can see that if you look at this fib zone here, so if we go back to up here on the left here, so the 29th of October, yes, we had that sort of fall. But then if you look at the retracement, we're actually above the 38%, the 50%, and now we're clearing above the 61.8 fib retracement, going all the way back there. And that's quite a positive thing. That means that the bulls, they're not only a reactive bounce to the 38%, but they've actually pushed their way through, a lot of the moving averages, and now are above the 61.8 fib retracement. So ordinarily, that would signal a little bit more than just a purely reactive bounce. And you have to say the bulls at this point are in control. There's a little bit of a test here at about 25,000. Let's call it 820, 25, 820 on the futures. If we can get through there, you've got to say that a retest of the recent highs is probably sort of on the cards. So it's looking relatively good in terms of something like the Russell and the small caps. Had a bit of a wobble last couple of days, but a bit of green. Let's see if that can push here. This could even be a sort of a bull flag kind of situation, which could be pushing to the high. And then if we look at the just to get a sense of the context here, if you look at the equal weights, you can see that's also doing quite well, similar to the Russell, but trading along the high, and the percentage of stocks above the 50-day average. It's come down a little bit, but still it's a little healthier. The breadth is a little broader than it was, over the last couple of weeks or so. So overall, the US stock market's looking quite good. European stock markets, if we look at something like the stock 600, again, similar to the US, grinding towards highs over in Germany. Some people are talking about a potential for the fiscal package to actually finally kick in 2026. And also an interesting point is that part of the let's say, for example, the DAX over in Germany, which has been a little bit sort of flat. We know that some of the elements in the DAX are the defense space, and we saw yesterday the meeting between Witkoff and Putin in Moscow. Not specifically that meeting, but in other comments, Putin was quite aggressive, saber rattling, saying that if the Europeans wanted a war and were going to attack his shipping, he would happily engage in a war. So the point is that Putin is definitely still being a little bit militaristic, a little bit aggressive, saber rattling, to use that expression again. And so the thing is that in terms of the defense stocks, which make up key components of the DAX over in Germany, that indicates possibly some of that fiscal spending package will in fact come through in 2026. We could see a little bit of over the medium term of sort of upside in the DAX, especially if a peace in Ukraine proves to be elusive, at least in the short term. What did get my attention, though, if you look at Brazil, absolutely a very, very strong chart. Like all dips are being bought here. I mean, it's very technically very bullish chart in sort of blue sky territory, as people like to say. So at this point, I don't know where we could get to if we look at a sort of a Fibonacci extension, either taking it from down here or down here. You've got, we are getting a little bit overextended here if you want to measure it out to a slightly higher move. But definitely, we've completed the measured moves and you saw a bit of profit taking, but it looks as though that wants to go a little bit higher. And possibly you have to start looking at new sort of Fibonacci extensions and profit targets, and maybe if we measure it out, let's say from down here on the in middle of October, you can see that the Bovespa here could get up to the 165, 167, 170 kind of level. So definitely Brazil, in better relations with the US, and also the commodities doing very well. A lot of commodities being sold to the Chinese. So Brazil's having a nice moment here, as is, we should say, also the Kospi. South Korea, there's a nice sort of bull flag here. It looks as though that has more upside, even though it's been on a tremendous run for a long time, depending on where you measure this impulse. But you could have a measured move up all the way up here, or if you want to be a little less aggressive, something like up here. But definitely a retest of the highs up at 4,200 does seem possible, and even to break a little bit higher. So the Kospi doing pretty well, semiconductors and whatnot. So global equity doing, as I say, quite happily, at the moment. That's it. In terms of some other stuff, let's just look at some of the currencies. As I mentioned earlier, the fact that Kevin Hassett may be the new Fed chair, causing a little bit of weakness in the US dollar here. Again, not only that, there was also technical resistance, as you can see, around about 100. So we've had 5 or 6 days of sort of a weakening US dollar. The differentials, also the fact that the Fed may be cutting in December, that looks like a done deal. No pushback from Powell. So those differentials, as I pointed out yesterday, are coming closer. So U.S. yield seems to be coming down. Where you have the Bank of Japan, potentially going to hike. And interesting, if you're looking at the bonds, most of the bonds are up. But if you look at the Japanese 10-year, you can see that it actually broke some pretty key support down here at about 98.50 on the JGBs, the 10-year. You see on the futures here pushing down. Now, if that is to continue, you see here there's a lot of space, not so much blue sky, but kind of a gray sky below. And it means that the Japanese 10-year yield, as this price goes down, the 10-year yields could continue to rise there. And you see that's breaking, that could break down, which is not happening to other global bonds. Although, of course, if that Japanese 10-year does break down significantly, we could see some upward pressure on yields in some of the other developed market bonds. But the point is here is that these yields look as though they're going up, US yields coming down, and that's putting a little bit of pressure on the dollar. But if we look at some of the cross pairs here, as I say, let's just go talk about Switzerland, because Switzerland, we had a slower, slightly lower than expected inflation this morning. Now, the point is that we're getting almost at negative interest rates in Switzerland. We're just, about 10 basis points above into the positive. And, the Swiss National Bank, which is meeting next week, I don't really think they're too keen. They've said that the bar to go into negative territory, so negative interest rate policy, NIRP, the bar is quite high. The Swiss National Bank is not too excited about going back into negative interest rates at all. But what we can see here is that the euro is holding into a nice sort of sideways consolidation here, and could potentially it's between the 100 and 200 day, and with these lower than expected sort of inflation numbers, which we got from Switzerland this morning, would not surprise me if the market starts to push up higher on the euro Swiss franc. Also seeing the euro in general up a little bit. You see breaking out here against the US dollar. Again, that's not only a function of maybe interest rate differential sort of closing up in favor of the euro, but also potentially new so the Fed cutting, and potentially sort of a slowly weakening or flatlining US economy. If you put that all together, and obviously this morning we'll get a bit more sort of a read on the US economy, but it looks as though the euro USD here is pushing high. There is no significant congestion up around this 117 level, so not necessarily predicting that this is going to push up to 118 or 119, but another few pips could be possible. And keep in mind as well that energy costs in Europe, in the form of things like nat gas, are pretty low levels. And if you're looking here at the nat gas, the main nat gas contract, the TTF here, you can see that nat gas prices in Europe continue to decline here, and that's going to be positive for the terms of trade of the euro, just paying less for energy. That's great for Europe. And at the margin, also quite good for the euro against the US or against most currencies. So euro enjoying these lower sort of energy prices. If we look at, on the other hand, against the Japanese yen, you can see here that the dollar did have a little bit of a comeback. This is going to be pretty critical here. If we could put, let's say, just a few levels here. So we put on a fib here, you can see that it bounced off the 50%. So you see from this recent impulse from the 17th of October, US dollar grinding higher. It did bounce. This is now critical because it couldn't really sustain this bounce here. And we're seeing the Japanese yen strengthening or we could say the US dollar weakening. So it's going to be quite a critical sort of period here. If we get back down into this zone here, and break the 20-day moving average. Next stop will be this downtrend line. Let's keep an eye on that. Any comments out of Japan? And of course, the data, if we get weaker data today, that also could give an impetus for the US dollar to further weaken against the Japanese yen. Although, having said that, the point is that the Japanese government is massively indebted. Their percentage of, or the ratio of debt to GDP is kind of the highest in the world in the developing markets. And at a certain point, if the BOJ feels uncomfortable or unable to hike, there has to be a pressure valve somewhere. And that has been the Japanese yen weakening against most currencies. So we'll see if that continues to happen. On the other hand, so the Bank of Japan hiking is critical. If the Bank of Japan continues to not hike and has dovish rhetoric, we could see this just more as a bull flag situation. Maybe the US dollar wants to push a little bit higher. Finally, guys, quick look at oil. As I say, Putin yesterday, there's obviously no immediate and quick resolution to the situation in Ukraine. And so oil, not exactly ripping high, but, not sort of collapsing anymore or falling anymore, just kind of grinding sideways. It really wants some direction about the global economy, US economy, potential action with Maduro in Venezuela. Is he staying? Is he going? And obviously the situation, excuse me, in Ukraine. Until we have resolution, probably really on all three matters, I think that we could just see oil, up a dollar or two, down a dollar or two, essentially just trading in this range here, maybe between something like about, $58 up to about $60, just for the time being. We also just having a quick look at the metals. We all know that silver are ripping much higher. Let's actually look at silver because that's been the leader at the moment. So silver, not really doing anything wrong at all at this point. I mean, for sure, if you look at sort of a Fibonacci extension, where could the profit target be? We are getting to levels which are obviously overextended. If we look at the stochastics, if we look at, let's say, the RSI, we can see that, it is in overbought territory at 75. Although having said that, it can go a bit higher. You see, going back a couple of months, up into the 80s. And if you look here, even with some of this sort of overbought territory, can grind higher. So is it overbought? For sure. But is it necessarily going to collapse today? No, that's not at all necessarily what we might see. And the moving average is all very strong. We are getting into a sort of the Fibonacci extension territory. Although, as you can see, there was a fairly deep pullback. And so it is possible now that this could, it could grind higher, maybe up to $62, $63. Let's just keep a look at the price action. The momentum does seem to be tailing off a little bit, but it's still pretty early in the day. Let's just see how this goes. If we get another green candle, it could continue to push up into the mid 60s. Gold, on the other hand, not doing anything wrong at all. As you can see, all the moving averages still above even the 20-day moving average. So still a powerful chart. There's nothing much to say here. Silver seems to be leading a little bit. And even copper, if we have a quick look at that, copper is breaking out. There's a pretty key level here, at least on the US contract, the high grade here at 5.36. As you can see, it's almost like a triple or maybe even a quadruple top. Had a bit of a test up there, pulled back a little bit. But let's see if we put that, let's say, on an hourly chart for a little bit more granularity. You can see here that it was rejected. So this is a pretty key moment now. I would just say that even on a short-term fib here, what the bulls need to do is to sort of come into these fib zones, 55.32, 5.3, somewhere around about here, and pick it up. Otherwise, that would just be sort of another test of that key level, and we could see a bit of sideways action. That's going to be an interesting one to watch today. The copper chart. We'll have a look at that. Okay, guys, I'll leave it there. Keep in mind we have the ISM services at 10 o'clock, ADP coming up in about half an hour or so. Have a great trading session, and we'll be back tomorrow, the very special day of December the 4th. Okay, take care, guys, and have a great day. Thank you.